This is Alan Farley from FX Empire. Beyond Meats came public around 46 in 2019 and took off in this momentum-fueled rally, reaching the 240 level about the same time it was discovered that insiders were selling the stock. Well, that created this very V-shaped top, inverted V-shaped top, a lot of selling pressure, which was supplemented when they decided to do secondary offerings on the way down. Now the stock settled right around the $70 level heading into 2020 and then broke that support level during the pandemic decline in the first quarter. It spent a good part of the rest of the year recovering, first up to the 618 retracement, then up to the 786 retracement, which is very, very strong resistance for any instrument recovering from a steep decline. Now it came back down to this trading floor, which is sort of created by this gap in May, right around the 115 level. Came back here once, came back here again at the start of 2021, and then took off in one final advance that crossed the 786 and reversed and closed back below it all in the same session. Now, there's been a lot of aggressive selling since that time. We have this little pop here, which isn't so little, after the company issued a very weak earnings report last week. This is actually a 21.2-hour decline that trapped bulls after the company announced a McDonald's and Yum Brands partnership. Well, the selling pressure has continued after analysts reported there'll be little or no income from those partnerships in 2021, and it's very possible the stock's going to come back to this sort of line of support down here below 120. Now, every time it's hitting this level, it's getting harder to maintain it, so we do have to watch out, because a gap fill here will also mean a breakdown of support, perhaps taking the stock all the way back down to this big horizontal low in the 40s.